Good morning, ladies and gentlemen. Good morning for those of you who are in cyberspace and for those who are present in person. I want to wish you a warm welcome to the 4th annual AGM for Cygnus Credit Investment. And my God, as the saying goes, tempus fugit, how time has flies. It's 4 years already since we have been on this journey. Without any further ado, since we are running a little bit late, I'll ask the chairman, Linval, to come and bring this meeting to order.
Thank you very much, Gregory. Good morning. And although it's a little late in the year, I want to wish everyone a happy 2022. As the opening remarks indicated, my name is Linval Freeman, and I am the current chairman of Sygnus Credit Investments Limited, often referred to as SCI. I take the opportunity to welcome everyone to the 3rd annual general meeting of our shareholders. And before I go further, I want to take the opportunity, because this is my first AGM as chairman, but I also want to take the opportunity to, shall I say, pay some tribute to our outgoing and former chairman, Clement Wayne Iton, who was our inaugural chairman and served SCI for the period 2017 to 2021 when he demitted office. During Wayne's tenure, he really provided what I would say invaluable service to SCI, gave great insight and strategic leadership to the company, and by way of doing that, the company was able to expand its footprint across the Caribbean region and grew its private credit portfolio from 16 million where it started to 85 million when he debuted office. And not only that, the company was able to declare dividends of some $6.5 million over the period, and also up to the last audited financial statement had a record year of some $5 million in profits. Wayne also served as a member of the Audit and Governance Committee in 2018, since 2018, when the company became listed on the Jamaica Stock Exchange. So we want to express gratitude to Wayne for his exemplary leadership and his commitment to SCI. We also want to acknowledge him for working with the Cygnus Group, the directors and management, and the various executive members over the last 4 years. He has been with the company and with the group throughout the growth cycle, especially during the COVID pandemic period, where we provide sterling leadership and provided guidance, and we want to therefore wish Wayne every success in his future endeavors and want to say a big thank you to him. Each year, we look forward to the opportunity to meet with you, our shareholders, and to share with you our accomplishment over the past year. It is always our pleasure to meet with you all in person, but understandably, during this pandemic, which is unprecedented, we are now meeting basically virtually for the second year in a row. We know that the past year has been very trying. Some of you and some of us have suffered through this pandemic, and so we are delighted in any event to have as many of you that are online sharing with us today. By way of I wish to advise as well that our company secretary, Rory McManara, that in accordance with the company's Articles of Association, that a quorum is present by proxy and in person. I therefore, on the basis of a quorum being present, declare the AGM open and therefore formally call the AGM to order. Ladies and gentlemen, the meeting is being streamed live from St. Lucia to this satellite location in Jamaica. And apart from myself, we have the other directors, Mr. Ike Johnson, Ms. Hope Fisher, Mr. Peter Thompson, Mr. Damian Chin, Mr. Ian Williams, and Mr. Rory McNamara, Mr. McNamara, who is in St. Lucia, and is representing MCI as part of the corporate secretarial duties. And therefore, all our directors, I think, are online and is joining us today in this AGM. Also in attendance, I'd like to just mention that we have our investment advisors and executive and senior management team. I'd like to recognize Mr. Beresford Gray, CEO of Cygnus Capital Limited. And I did see Mr. Jason Morris, who is the Chief Investment Officer of Cygnus Capital Limited. I'd like to also acknowledge Serlin Hudson, Chief Legal and Compliance Officer, Mr. Gregory Summers, who started the proceedings, who is Senior Vice President and Head of Investment Banking, Mr. David Cummins, Vice President and Head of Real Estate and Project Finance, Elizabeth James, Head of Wealth, and Monique Anthony, Chief Financial Officer, as well as other members of the executive and management team present. Our auditors, KPMG, is also represented by Mrs. Karen Ragbosing, who is also in attendance with us today. From the Jamaica Central Securities Depository, JCSD, or Registrar and Transfer Agent, they are represented by Ms. Alicia Deans and Ms. Bridget Gale. I also wish to advise the meeting that members of the press and non-shareholders may also be present. Throughout the meeting, as we go along, and as I indicated earlier, I will refer to Cygnus Credit Investments Limited as the company, or as SCI, as we abbreviate the name. You would have been handed a copy of the agenda, which set forth the proceedings for today's meeting. And so, as we go back to the agenda, we are now on item number 2, which is apologies. And I've been advised by our corporate secretary that there are no apologies for absence. Item number 3, minutes of the meeting. I advise that the directors have confirmed that the minutes of the AGM held on the 15th of December 2020 are true and correct, and it's a correct record of that meeting. Copies of the minutes of that meeting are available at the location in Jamaica or on the company's website if you wish to read through and to make any kind of comments that you may have. In terms of today's meeting, as we all are aware, today is the AGM, third AGM. The purpose of the AGM is really to seek the approval of the shareholders of the company for the respective resolutions as outlined in the notice. And so we have 5 resolutions today. 1, being the adoption of the audited financial statements for the year ended 30th June 2021. 2, to recommend and to approve the final dividends for the year ended 30 June 2021. The third item is to elect directors who have retired by way of rotation. and the fourth is to approve directors' remuneration, and the fifth is to reappoint the auditors, KPMG, and to fix their remuneration. The resolutions were duly set out in the notice of the AGM dated 9th day of December 2021 and was duly signed by the company secretary. I wish to advise that we have received 69 proxies that have been lodged by shareholders holding 289,937,172 shares and representing approximately 49.06% of the ordinary share capital of the company. The votes cast by proxies have all voted for the for the resolution set out in the notice of the meeting. The notice of the meeting and the form of proxy were dispatched to all shareholders on record in accordance with the company's Articles of Association. If there is no objection, I propose that the notice of the meeting be taken as read. Just by way of outlining the procedures for today's meeting, it might be helpful to just explain some of the procedures for this AGM. After each resolution has been proposed, there will be an opportunity for shareholders to ask questions about the resolution, if they so desire. If you have a question, I am going to ask that you state your name, or if you're a proxy holder, that you state the name of the shareholder for whom you're holding the proxy before asking the question. Voting by proxy. As indicated before, the Secretary has collated the proxy votes, and these votes were received within the prescribed period of 48 hours prior to this meeting, and the details were already indicated. Shareholders who have sent in proxies appointing the chairman as their proxy need not take any further action in respect of the matter of the resolutions. For those present, voting shall be by way of show of hands. The votes are calculated simply by reference to the number of members physically present at the meeting, in person or by proxy. We now move to the business at hand after those opening remarks. In order to conduct this meeting in an orderly manner and to give all eligible shareholders an opportunity to participate, we will follow the procedures in the program. During the conduct of the formal business, questions and comments from the floor should pertain to the specific proposal and the specific business at hand. I ask that anyone wishing to speak or to raise a question to raise their hands, and an attendant will simply give you a microphone from which you can state your name as indicated and the shareholder who you represent and ask a question. Okay, so the first business at hand is the audited financial statements. So, in accordance with Article 190 of the company's amended and restated Articles of Association, the company is obliged to lay before this meeting the audited financial statements together with the reports of the directors and auditors, which are contained in the company's annual report for the year ended 30 June 2021. And the annual report was distributed for those who are present here and was also sent to each shareholder. I am proposing that the annual report, having been in circulation for some time now, that the annual report be taken as read along with the reports thereon. And as part of our presentation, of the audited financial statements. We normally give an overview as to the operations of the company and its performance for the year under consideration. And at this juncture, Jason, are you ready? I'll turn over to Jason and just ask Jason to come and make some comments and to give an overview on the financial performance of SCI.
Good morning, everyone.
Morning.
All protocols observed. I will try to give some brief commentary on the performance of Cygnus Credit Investments Limited over the period ending, for the financial year ending June 2021. Okay. So, just briefly, I just want to highlight some of the major milestones that would have occurred for SCI over the past 12 months to present day, since the period ending the financial year is a bit behind us. So, the first thing I want to highlight is that 12 months ago, roughly, in December 2021, SCI would have raised a record 27+ million in an additional public offering, which was a feat in of itself, given that this was done during the middle of COVID-19 pandemic. The second milestone occurred in June 2021, which would have resulted in SCI registering or reaching the milestone of, for the very first time, achieving $5 million in profits in only 4 years. And I need to repeat that milestone. So in only 4 years of operations, SCI delivered $5 million in net profit, which is a great achievement in of itself. The next milestone in September 2021, sorry, SCI got its credit rating from regional rating agency Kpis, which was an investment grade rating, JM, BBB, and the Jamaica scale. That, again, is another achievement for a 4-year-old company. And then, following up on that, the Q1 results were released, and that was a Q1 record $1.51 million, following up on the audited financial statement record of $5 million in net profit. In October, SCI closed a record $27.2 million in notes that were issued in a private placement following the investment grade credit rating that it got the previous month. And this actually allowed SCI to achieve the total capital budget that it had for the 12-month period ending December 2021, which was actually presented at the last AGM, which is to raise a minimum of $50 million in debt and equity capital, and we actually ended up about $54 million debt and equity capital over the period. And then, following that, news that our shareholders want to hear about, in October as well, on the 15th of October, SCI would have announced, or actually paid, the highest dividend in its history, which is $1.5 million. And finally, not to be outdone in terms of the growth trajectory of the company going forward, SCI would have announced in December its intention to purchase a majority stake in a Puerto Rican private credit company by the name of Acquisent Financial Corporation. And we'll give you a little bit more of detail on that later in the presentation. And when that transaction is closed, we'll actually give you the full details on that. So that's just a quick overview. I won't spend too much time on this slide. Just to say that SCI is a pioneer and a leader in the alternative investment space, and particularly in private credit in the Caribbean region, and would have deployed over almost 150 million in capital to middle market businesses in the region in only 4.5 years of operation, has a balance sheet of greater than 100 million US, has financed more than 41 portfolio companies over the period, has invested across 12 different industries and deployed capital in 8 different territories since inception, and very importantly would have proactively managed the risk of its balance sheet such that it has thus far registered nil realized credit losses since inception. So now to the matter at hand, which is the summary of the audited financial statements. So in terms of core revenues, our total investment income, SCI would have delivered a record $6.59 million US, up 44.2% over the previous financial year. Relating to core earnings and net investment income, that would have been $3.76 million US, up 24.1% over the previous year. In terms of net profit, that would have been the record $5 million I spoke about before, up from 1.97 million the previous year, and that actually resulted in a record earnings per share of 1.11 US cents versus 0.56 US cents in the previous year. And finally, SCI would have ended the financial year with a record private credit portfolio at $82.8 million US, up 54.5% over the previous year. One thing I want to highlight here is that the quality of SCI's earnings, 98% of the core revenues was due to net interest income, which is just straight cash flow. So there aren't any funky items in the revenue line, in the total investment income line. And this is just a chart showing you the progression of SCI's core revenues and core earnings. And as you can see, the company has grown core revenues at a compounded annual growth rate of nearly 76% and core earnings at nearly 66% since inception. In terms of dividends, and these dividends that I have here on the screen are presented in a slightly unique format. So the way we present our dividends is try to show you how much dividends has actually been paid based on the financial year results. Of course, dividends aren't necessarily paid within the financial reporting period. So for example, the final dividend that SCI would have paid due to the audited financial statements would have been paid on October 15th, which is outside of the audited financial period for the financial year ending June 2021. So, in total, SCI has returned to shareholders, $6.5 million US, or 10.3% of its share capital in only 3 years, because the first dividend was actually paid in October 2016. So it has only been paying dividends for 3 years. The average yield in USD since the company became public is 4.5% on USD shares, and on the Jamaican dollar shares, that's 5.1%. And the difference has to do with, obviously, exchange rate fluctuation in terms of when the USD dividends are actually converted to Jamaican dollars. So for the financial, based on the financial results of the financial year ended June 2021, the dividends that would have been paid, including the October 2021 dividends, is $2.42 million US, which is up 28.1% over the amount paid for the similar year. And I want to highlight something here. SCI's dividends are actually tax-free, and therefore, if you were to gross up the tax-free status of SCI's dividends and account for the 15% tax on dividends, then the gross yield since the company became public and USD shares would be 5.4%, and on JMD shares would be 6%. As for, and this is obviously on the IPO price, As for what the current yield is on those same IPO shares, the yield would be 4.8%, and gross up that's 5.6% for USD shares, and for Jamaican dollar shares that would be 5.7% and gross up 6.7%. And this slide is just highlighting two key metrics that we watch, which is operating efficiency, that is how much money are we spending relative per dollar of revenues generated, which is very important, and SCI's benchmark against global best practice. And the standard that we are utilized for ourselves is a 40% threshold. So if you are below the 40% threshold, that's a good thing. If you are above the 40% threshold, that's so much of a good thing. But there may be occasions when you can get outside of the threshold. So as you can see, for the financial year in particular, the actual computation was 42%, slightly above the threshold, but 5.4% of this was generated from a first-time occurrence, which is performance fees related to beating the hurdle rate that would have been set for SCI at 6%. So on an adjusted basis, the efficiency ratio was actually below the threshold of 40%. Similarly, for the management expense ratio, which is looking at how operating expenses relate to total assets under management, again, we promised shareholders that we would manage toward a threshold of 2.85%. And in this financial year, we would have, the computation would have been 3.1%. Again, if you look at the adjusted numbers, it would be within the threshold at 2.7% due to the aforementioned performance fees. And those performance fees, of course, would have been generated because the company moved net profit from 1.97 million in the previous financial year all the way up to 5 million in the 2021 financial year. In terms of summary of the balance sheet, shareholders' equity ended the period at $66.7 million US dollars, up 77.1%, primarily driven by 25 million net inflows from the additional public offering, with the remaining 4 million due to retained earnings from increased profits over the period. Total assets would have ended the period at 87.9 million, up 44%, again driven by a combination of the aforementioned additional public offering as well as debt that would have been used to finance an expansion and growth of the company. Now, this is a very important slide, and we call it balance sheet key performance indicators. So as a pure financing firm, and more specifically, as a company that's wholly and only dedicated to using flexible debt capital to invest in portfolio companies across the Caribbean region, we are managing according to certain benchmarks, which are, again, following global best practice. And that is debt to total assets, which we actually have a limit of that needing to be below 0.5 times. And this is one measure of leverage. So this is just to ensure that the company isn't over leveraged. The second metric is called an asset coverage ratio. And effectively, this is looking at how much asset we have on our balance sheet that can be converted to cash versus the amount of debt that we are carrying on the balance sheet. So that threshold is to always have that above 1.5%. Why? 1.5 times, sorry. Because in a worst case scenario, we can effectively discount the assets on the balance sheet by, let's say, 50% and still pay off the principal and interest of any debt that we are carrying. So this is a very, very important metric. So it's for a pure financing company, which is in the private credit space, is a very important metric versus other metrics that you use for normal companies. And of course, at the end of the financial year, SCI would have been at 3.72, more than 2 times what the limit is. The third thing is debt to equity. Again, another leverage metric to ensure that the company isn't overburdened by debt. And SCI actually has a limit of 2 times debt to equity. So that's the limit that that we really have. But management is managing towards a threshold between 0.9 and up to 1.25 times. So what this ensures is that we can use leverage to increase shareholder returns and pay good dividends and generate good earnings per share. But at the same time, if you have a crisis like the COVID-19 pandemic, the balance sheet isn't stressed. And you would have noticed that last year AGM we said the same thing about SCI when you have crisis situation and economic challenges, that is when private credit companies normally thrive. And that's because of what these metrics, these KPIs that I'm showing you. And the final point here is just to show that SCI and its balance sheet, it only has financial assets. So it's a clean, pure play exposure to private credit investments. So these metrics are what you need to look at every single time if you want to assess what's the creditworthiness of SCI. Very briefly, Chair, I will highlight what has happened since the end of the report, audited financial statements and the annual report. So since that time, we have released the Q1 September 2021 financial results, and they are pretty much in line with what would have happened for the audited financial year. A Q1 September record for net profits at 1.53 million. Record for total investment income 1.82 million. Record for net investment income 1.13 million. And a record private credit portfolio of roughly 89 million. And again, 17 consecutive quarters of not losing a dollar of shareholders' money through realized credit losses. Again, this is the chart for the Q1 September quarters in terms of core revenues and core earnings, and you can see it's a similar trend that we would have shown for the audited financial statements, where the compounded annual growth rate is extremely fast, 80% for core revenue, 71% for core earnings. Similarly, for the efficiency ratio, we have gotten it back inside the threshold level, but still there was a uncorrected amount over from the audited financial statements that was not material, that is accounted for in the quarter, and that ended up causing the efficiency ratio to be a little bit higher than it should have been. But on an adjusted basis, it's well within the threshold level. And for the management expense ratio, on an adjusted basis, it's well within, but that one-off item meant that we ended up at 3.1% for the end of the period. And then the balance sheet KPIs, similar to the end of the financial year, they are all pristine. A company like SCI, which is a financing company, where its debt to total assets is 0.25 times and its debt to equity is 0.35 times. On the one hand, that company is, doesn't have a huge material risk on its balance sheet outside of its credit portfolio, of course. But on the other hand, it means that it has huge potential upside to use leverage to increase shareholder returns and earnings per share, etc. And then in terms of investment activity for the quarter, private credit portfolio at a record, growing very fast. Number of portfolio company investments at a record. New investment commitments, 6.9 million, a little bit down from last year, but these sometimes can be very lumpy. Meaning you can have periods when you put on 20 million or 10 million or 50 million on the balance sheet in one quarter, and then next quarter it dips, depending on the timing of when you actually structure the transaction. Average portfolio yield, very important, is actually rising. We're in a rising interest rate environment, and therefore one should expect that this is gonna, or the yield on the portfolio is gonna continue increasing. So for analysts who are looking at SCI and looking at historical information to value the shares, and I'm gonna have some comments on that later, need to take this into consideration. In fact, financial stocks in general, in a rising interest rate environment, I'm not giving financial advice here, but you literally can just buy them and leave it and forget it, right? They are going to make more money in a rising interest rate environment. Average tenor of investments, 2 years. So SCI effectively is earning almost 13% yield and only taking 2 years risk in terms of the tenor of its investment. You can't get that with any bond that you buy anywhere. And last point on this page, portfolio seasoning, which is not rice and peas and curry chicken, is basically how much money we have gotten back from investments that we have deployed. So effectively, we have received 53.5 million of our money back from 21 investment exits. So this should tell everyone that there's no question about the longevity or the sustenance of SCI's business model. We can put that argument to rest. We have gone through 2 audited financial reports and a quarter in the middle of the biggest pandemic that all of us here have seen in our lifetime, and SCI is reporting record profits. So we don't need to worry about the business model. The business model is perfect. It's fine. The question is just how we can actually optimize shareholder value to generate returns for shareholders. Now, very briefly, and Beres will actually complete a lot of these thoughts. Just want to give everyone a little insight into what we are doing. So from a strategic approach in the pandemic environment, I would have presented this slide last year, so I'm not going to go through it too much. But for those who are new to SCI, there are 3 main things that we're focusing on. 1, proactive risk management, which is to ensure that we minimize realized losses. There are, of course, unrealized losses due to ECL, which is an accounting metric that every time we put on an asset on the balance sheet, we have to estimate what's the probability of the loss that we may make over the next 12 months. So that will fluctuate depending on the type of assets you put it onto the balance sheet and whether or not you're taking assets off the balance sheet. All right? So effectively, the expected credit loss reverses if you exit a transaction and don't actually crystallize the loss. So that will fluctuate from time to time. One of the ways that we try to manage risk proactively is to ensure that we are putting on good assets on the balance sheet. And the strategy that we have used all throughout the pandemic, which represents about 3/4 of the portfolio companies on the balance sheet actually, is to deploy capital into what we call sponsored portfolio companies. And sponsor just simply means that the company is part of a larger group of companies, or it has common shareholders who have deep pockets, or it's part of, for example, a private equity setup, etc. And what this typically means that these companies will generally have very good management that can manage and navigate a crisis, like we have been through over the past 2 years. They are also going to be normally leaders in their various industries, which means that during a crisis, what they are going to do is look to increase market share or raise capital to grow and expand. They are not trying to survive in a pandemic. They're actually looking to, when the pandemic is over, if they had 30% market share before, they are looking to have 50, 60% market share after, because they are going on an acquisition binge, etc., etc., etc. Second thing is partnership approach, which has served us well for the first 2 years of this crisis. SCI at this stage has become the #1 source of flexible capital. Anybody who's looking to do a complex acquisition or need flexible capital to fund a transaction very fast, they call us first. And that's not just lip service, that's actually reality. We actually had a transaction that required a large ticket to fund it in about 2.5, 3 weeks from taking the information, presenting it to our investment and risk management committee, getting approval, perfecting the documentation, and then sending the huge amount of capital out through the door. And we were able to solve the client's problem. And we have done this many, many times during the crisis. And this is the benefit of actually having a private credit company that utilizes flexible capital. It's not a bank. We're not putting you, and I'm not casting aspersions on bank, but we are not putting you in a black box and say you need to fit these rules or else. We are starting with a blank sheet of paper, looking at the issue that you have or the challenge that you have and solving it from scratch. And that requires a particular skill set. Everybody can't go and do it. And safe to say that we have the best team, we think, in the entire Caribbean region, led by the great Big Greg. So we have had multiple repeat business during the pandemic, which has served us well, which is why we have no realized credit losses thus far. This is glass, but knock on wood. And finally, being a differentiated solutions provider, I spoke about our expertise already across different industries, different sectors, in order to analyze the risk and embed in the note downside protection for shareholders. Ability to structure very complex transactions. And of course, ability to underwrite. So even if we are not the ones funding 100% of the transaction, the ability to say to a client who has a need, we will underwrite the entire transaction and bring in some other partners to actually get the entire funding. And finally, speed. Extremely fast. You come to us today, we can get your transaction done in 4 weeks, 6 weeks, and of course we have done transaction in 3 weeks, as I just mentioned recently. So that's our differentiated approach. Second thing, I just want to give an update. So last year the AGM would have stood in front of shareholders and presented a 3-year strategic map. So we feel it only right that we should come back and tell you what's the update on that strategic map, because we are very transparent and want shareholders to understand the business model, because it's the only 4.5 years in the market, so everything is not going to be understood by everyone, and we're trying to use every opportunity for shareholders to understand the company that they have taken their hard-earned cash to invest in. So we had 3 items last year, and we said we had a 2 to 3 year timeline, which would mean December 2022 to December 2023, within which we needed to achieve certain objectives. So I'm giving an update on that. So the first one was to increase scale and dry powder, and we said at that time we needed to grow the portfolio to 100 million US. And for all intents and purposes, you can say that we have we have blown that target out of the water very early. Of course, because we have announced our intention to acquire Accrescent in Puerto Rico, but even without that, the target would have been achieved way in advance, maybe a 1.5 years, 1 3/4 in advance. We also said we needed to generate a minimum of $8 million US in total investment income or core earnings. Same story there. We are going to blow that target out of the water well in advance. We are on track to exceed that. Raise 50 million in equity and debt capital by the end of December 2021 last year. And I've spoken about that we exceeded that target. Obtain a credit rating from Kpis, and we would have done that. Second thing we said, we wanted to enhance shareholder value by optimizing SCI's capital structure, and we have started that process in terms of increasing the use of leverage at a cheaper cost by first getting the credit rating, which would have assisted us greatly in that stead, and of course raising the record amount of debt that I would have spoken about already. And this is going to be an ongoing process. Second thing is to increase return on equity and enhance dividend payments. The second part of that, we started that already by the dividend payments that would have been paid out, record dividend payments, dividends that would have been paid, and of course we are on our way in terms of enhancing shareholder, enhancing return on equity, which is a process that will take some time to do. But every quarter when we release record profits, that process is advancing. Third thing we said, we wanted to protect and support existing portfolio company investments because we're in the middle of a pandemic, right? And we said we wanted to protect portfolio companies by providing working capital and incremental credit enhancements. And we have done that for many portfolio companies, and that's a work in progress. And the second thing is the support. So there are companies on a balance sheet that will need growth capital because they are acquiring left, right, and center. And of course, we would have done that extensively thus far during the pandemic. The fourth thing that has been added, which is new, is obviously the acquisition, which we would have been working on for more than a year, but we could not have released that information before we signed on the dotted line, right? So we are now at the regulatory approval stage, and we need to complete the transaction and integrate it within SCI and then use that to enhance shareholder value by increasing the dividends from where they are now substantially, and obviously, showing increased return on equity and earnings per share, etc. Quick view on Puerto Rico. There are no numbers here per se, but I just want you to understand a little bit why we chose to go this route. Accrescent is a private credit firm in PR. It's one of the largest, if not the largest, depending on what metric you're looking at, private credit firm in PR. And SCI is, going to acquire a majority stake in the company, and we'll release what that stake is, etc., once the transaction has closed in terms of regulatory approval. And Puerto Rico is a $100 billion US economy with a GDP per capita of over 30,000 US. To just put that into context, SCI is now diversified across 7 different English-speaking and Dutch-speaking Caribbean territories. When you add up the GDP of all of those Caribbean territories, it don't come to 50 billion US. In fact, if you add up all the potential English-speaking Caribbean territories that we want to take exposure to, the number still wouldn't come to 100 billion US. So that's just this magnitude of what we are trying to do. Of course, Puerto Rico, as everyone knows, would have been in bankruptcy from 2017, and fighting in court to basically restructure its debt and exit bankruptcy. And I'm not sure if it's perfect timing or luck or what, but on January 18th, 2022, that's what, 7 or 8 days ago, it would have received approval to exit bankruptcy. And therefore, what this means is that there's a tremendous amount of capital that is going to be unlocked in Puerto Rico for reconstruction, for development, for growth, etc. And as we demonstrated last year at this AGM, and when the pandemic just started, we said private credit companies that use flexible debt capital thrive in environments where you have what's going on, like what's happening now in Puerto Rico. So Puerto Rico is like where Jamaica was in 2013 when the IMF came in and we restructured our debt. That's how we are looking at Puerto Rico. And we have done our homework on this, and we think that this will actually unlock massive value for SCI and its shareholders. So 3 key things: enhanced diversification. It's a US territory, but we also get exposure to pan-Caribbean countries because the Puerto Rico operation actually have tentacles in several other countries. We're getting exposure to higher quality assets because of the nature of the companies that are operating in Puerto Rico is a US territory. Many of the big name companies in technology and biopharma. In fact, Puerto Rico is perhaps the largest biopharma industry in the entire US. We get exposure to those type of assets. We get exposure to growth and technology and healthcare industries that are not readily available in the English and Dutch-speaking Caribbean. And that's a huge opportunity for SCI to leverage. Of course, the quality of the earnings will increase because of the better companies that we're exposed to and better assets on the balance sheet. We also get exposure to what you call impact investing strategies, which is an alternative investment theme, which we'll speak a little bit more on later once the transaction is completed. And this is just speaking about taking capital and deploying it in a way where the environment will benefit, or whether it's through a social benefit to the various economic groups, or through a governance benefit, or ESG for short. So we get access to an impact investing platform which is not available in the English and Dutch-speaking Caribbean. Second thing, and perhaps most important, we get to reimagine SCI's growth path. So last year we would have said we wanted to hit 8 million in total investment income. Now we have to reimagine what that 8 million is going to be over the next 2 to 3 years, which we haven't completed yet, but it's certainly going to be a multiple of 8 million for sure. It's a bigger PCI market opportunity, as I spoke about before. Very important. we get the ability to attract and build relationships with multinational companies, financing companies, and with global institutional asset managers. I mean, SCI in the Caribbean, with most of its financing coming from Jamaica, is the same pension funds that you go to each time to raise capital, or the same pension funds you go to do co-investing, etc. Now, the opportunity set is being opened up, or will be opened up massively, not just because of the PR transaction per se, but because of the scale of SCI. Because the assets that we're acquiring will mean that SCI's private credit portfolio will be of such, in the 100, substantially above 100 million, that people will now listen to us and allow us a seat at the table with certain type of large transaction, which we can now have co-investing, underwriting, syndication opportunities. If there's a 50 million US deal, at this stage, nobody's going to invite SCI or 100 million deal. Very few people are going to invite SCI to the table because they are saying, hey, your balance sheet is too small. If we have both a US territory company and we now have a substantially bigger balance sheet, which means that automatically our credit rating, in my view, should also improve, then it means that people will say, hey, who are the guys in the Caribbean who we can syndicate with or who we should bring into this transaction to co-invest? And so SCI can actually generate additional revenue stream, because right now the majority of SCI earnings come from net interest income. 98% from total investment income is net investment income. Now we can actually generate a fee income line, because if we originate or syndicate or sell down on a big transaction, then that immediately, because of the sheer scale of those transactions relative to SCI's earnings, means that we generate a lot more revenues than we could before. So there are multiple opportunities that will arise from this. Final thing, the business strategy it's pretty much SCI's business model, right? It is the leader in its market, just like we are the leader in our market. They have a very experienced management team. People who would have originated from GE Capital. They have worked extensively in Latin America and the Caribbean region, and in Puerto Rico itself. And they are focused on middle market firms as well. So, it's a match made in heaven, so to speak. Final thing is, so SCI has been registering and recording phenomenal financial performance, right? And if I step back a minute, before COVID came in February 2020, the stock was trading at 21 US cents on the US dollar shares and about $28 at the peak on the Jamaican dollar side. COVID came in March, okay, the stock price, the entire market went down. So it went down to 12 US cents and I think $14, right? But we have had COVID, and we have had record financial results, record earnings per share, record financial results, and the stock price has not moved. And when I look at the trading volume, it's very thinly traded on the US side. Literally almost nothing is being traded. And on the Jamaican dollar side, yes, it's trading a bit more, but it's still low in terms of the liquidity in the market. And when I look at the industry from a price to book value basis, which is my preferred valuation metric, given the type of company that SCI is, the industry is at 2 times or more, and SCI shares are trading at ridiculous levels. 1 time or less is book value. And remember that on SCI's balance sheet are only financial assets. Meaning, if you liquidate the company tomorrow morning, you pretty much go and get in your hand the book value that's on the balance sheet, because it doesn't have, any asset that you can convert to cash. So this doesn't make sense to me. On a dividend yield perspective, the industry is like 2.5% dividend yield. SCI dividend yield today as I'm talking on a tax equivalent basis is 6% on the Jamaican dollar side, almost 5% on the US dollar side.
Buyback start next year. It's 5 years after this thing, okay.
Good man. So basically, we think that the shares are undervalued. But part of the undervaluation is if somebody has some shares and they buy to get benefit from the dividend and then they want to sell to do something with the money and then come back in for the next dividend payment, there isn't a lot of liquidity or a lot of float to take up those small orders. And when I look at the transactions, it is those small orders that are bringing down the stock price, right? So this is a concern to us. I'm a shareholder, and I'm increasing my shareholdings over time. So it's a concern to me personally, but I know that's a concern for shareholders, and therefore we want to do something about that. So we are basically exploring a number of avenues. One of them, obviously, is a type of buyback, which we wouldn't be buying back all the shares at once. It would be a buyback program so that we can, one, enhance shareholder value by buying back undervalued shares in the first instance, but two, providing liquidity support for when people want to sell, 100,000 US, 300,000 US, or 100,000 Jamaican dollar worth of SCI shares. That doesn't cause a problem to draw down the share price and then creative and negative feedback loop in the mind of investors. Because the company's financial performance, we are delivering on everything that we said we would have done, right? So it stands to reason that we need to solve this problem. So we'll provide additional information to shareholders once we have finalized this at the board level, etc. And I think that is the end of my presentation.
Thank you very much, Jason, for that wonderful presentation. I will now open the floor for questions, both persons here and also those online. Elena will be assisting me online. Any questions in the queue?
Is it on? Okay. There are a few questions from David Rose. He's asking, is there an expected timeline for the Acrescent acquisition to be completed?
Yes, we expect that we should receive regulatory approval in maybe another, I would say within 60 days. We expect it before that, but give or take. We should expect that 30 to 60 days, in that ballpark. If it can happen before, but that's a safe bet.
Okay. He's also asking if there are any details on the company's recent $5 million debt raise to refinance a debt facility.
So SCI, on a go-forward basis, since we have actually gotten our credit rating, we will be actively in the debt market, raising capital all the time. So that 5 million that he's referencing, which is actually 5 million US and 500 million J, would have been to replace the debt on the balance sheet that matured in December. So effectively just refinancing existing debt, especially given the fact that we are in an environment where interest rates are going up.
Okay. Are there any new territories on the horizon?
So I told you about PR already. So Puerto Rico is one big new territory. Outside of that, we have we are looking at opportunities in British Virgin Islands and some other English and Dutch-speaking Caribbean territories. We have several opportunities in pipeline. So those will unfold once we reach further in those transactions. And the PR transaction could also give us exposure to other regions. But I will provide an additional update on that at a future date when we have more information. to give.
Okay. How is the company's current US 27 million debt raise going?
It's safe to say that the money almost done, to use the Jamaican parlance. So it's going very well.
And the last question is, how has the credit portfolio improved since the investor briefing last year?
So the credit portfolio pretty much remains the same as it was before. No major changes, to be honest. As I said before, the main thing that we are ensuring that we do is absolutely be clued up around minimizing realized credit losses. So we would have exited some transactions that might, for example, have higher expected credit losses, and then put on some transactions that have lower expected credit losses. So you may see where the ECL might improve going through time, but that will always fluctuate up and down. From a non-performing investment ratio point of view, that pretty much remains where it was before.
All right. Has the board considered the structure or plan of the 2023 share buyback?
No, so we haven't discussed that in any great detail as yet. I just wanted to, since it's an AGM, and this is one of the forums that we get to speak directly to shareholders in a forum like this, and that's something that's going to consider in the next couple of quarters, then I wanted to just kind of put that out there in the space from now. But we'll be discussing this at the board level and making a decision which will be communicated to shareholders.
Okay. In both your IPO and APO prospectus, you stated that you may review dividend payments from semi-annually to quarterly. What would cause this, and when do you see this change being made?
So we will do this when the company when the dividends being paid is substantially greater than where they are now. We are paying dividends semi-annually now, and many shareholders, because of the number of shares that they have, it's actually cost them to receive the dividend. So that's the reason why we started out by doing the dividend payments semi-annually. But because we are in the business of delivering on the promise to increase the dividends materially, then when we get to a stage where we think it behoves us to reduce the frequency of the payment, then we'll do so. But that's not over the next 12 months, certainly.
That's it for now. I'm not seeing any other questions.
Okay, thank you very much, Nicole. Any questions from the floor? Neville from the Gleaner, see you are urging to go? Not yet? Okay. So I'm sure you shareholders must be excited about the new opportunities. You would have seen Cygnus in the news very recently with some milestone transaction. Jason spoke at length about the opportunity in the Puerto Rico. You would have seen SCI doing a P3 project with the Bahamas government where they invest some 9 million US or 1.5 billion Jamaican dollar in that project. And it just goes to show that despite what is happening in terms of the pandemic, we are looking for opportunities to diversify your assets so that in the event there is more bumps down the road, you are in good stead. And just to give some context, Jason spoke about Puerto Rico, about the economy being a $100 billion economy and GDP per capita of around 31,000 US. When you put that in context with Jamaica, we are a shade under 15 billion US. That's the size of our economy. And our GDP per capita is just above 4,500 US. So you see the tremendous benefits to be derived from going to a market like Puerto Rico. And of course, their population is similar to ours. They have about 3.1 million people, as opposed to ours somewhere at 2.7. So similar size, we're Caribbean. So even accept that Puerto Rico is a U.S. territory, much bigger economy, and much more opportunities for SCI to diversify and get exposure to really good assets there. So, if there are no further questions at this time, I will now ask our chairman to come and to lead the session on passing some resolutions.
Thank you, first of all, Jason and Gregory. So the financial statements were presented, and you know, these, I assume that we have approximately, I'm told, 90 shareholders online. And so I'm assuming that there are at least 90 shareholders listening in who are very happy shareholders based on the numbers that have been presented. And, you know, as a chartered accountant myself, who used to look at a number of financial statements and so on, we normally say that the numbers don't lie. So whatever is presented and been audited, those are the numbers. And so all I can say, it's been a tremendous performance. You know, a really very good balance sheet that we see in front of us. And so, having been satisfied with the presentation and the financial statement that were laid, can I now therefore ask for a motion, right, that the audited financial statements for the year ended 30th June 2021 and the reports of the directors and auditors that they are hereby adopted. All in favor? The ayes of it. I hear aye. The ayes of it. And so the motion has been carried, and so the financial statements and reports thereon are duly adopted. Okay, so we move to the next resolution, which is pertaining to the declaration of dividends. And the second resolution is that the interim dividends per stock unit of $0.00147 US paid in April 2021 and the US $0.0026 paid in October 2021 be treated on the recommendation of the directors as the final dividend for the year ended 30th June 2021. All in favor of the resolution say aye. Aye. The resolution and the motion is carried. And so we press on for the third resolution. So resolution number 3, based on Articles 149 and 150 of the company's amended and restated Articles of Association, provide that 1/3 of the board, other than the managing director, if one is appointed, and directors appointed by the holder of the special share, or if the number of members of the board is not 3 or a multiple of 3, then the number nearest to 1/3 shall retire from office at each annual general meeting. The directors retiring under these articles are Ms. Hope Patricia Fisher and Mr. Ian Sentville Williams, who, being eligible, offer themselves for re-election. And I am confirming that both Ian and Patricia Hope are online participating in today's meeting. And therefore, the proposed resolutions are as follows. That Ms. Hope Patricia Fisher, who retires by rotation in accordance with Articles 149 and 150 of the company's amended and restated Articles of Association, and who, being eligible, offers herself for re-election as a director of the company, be and is hereby re-elected as a director of the company. All in favor of this resolution? Aye. The ayes of it. That Mr. Ian Sentville Williams, who retires by rotation in accordance with Articles 149 and 150 of the company's amended and restated Articles of Association, and who, being eligible, offers himself for re-election as a director of the company, be and is hereby re-elected as a director of the company. All in favor? The ayes have it. So that's resolution number 3. Resolution number 4, director's remuneration. That the amount shown in the audited financial statements of the company for the financial year ended 30th June 2021 as remuneration paid to the directors for their services be and is hereby approved. All in favor of this resolution? The ayes have it. The 5th resolution, appointment of auditors and the fixing of their remuneration. And of course, KPMG is present online as well. But that KPMG, Chartered Accountants, having agreed to continue in office as auditors, be and are hereby appointed auditors of the company to hold office until the next annual general meeting at a remuneration to be agreed by the directors of the company. All in favor of this resolution? The ayes have it. We are now at item, so we've passed all the resolution. Thank you very much, shareholders. We are now at item number 6 on the agenda, where we will have a presentation by Mr. Beresford Gray, CEO of Sygnus Capital Limited, and who are also the investment manager to SCI. So, Beres, can I invite you now to the podium? Thanks.
Thank you, Linval. Before I start, I would like to acknowledge the members of the Cygnus Capital Board, including our chairman, Mr. Milton Brady, who is online. And then I would say all Portugal observed. Ladies and gentlemen, good morning. Shareholders AGM is always a very exciting meeting for me, because this is, I think Jason mentioned it, this is probably the only opportunity that we really get to share our vision of the firm and also highlight some of the processes and strategies that we are committed to in terms of creating and driving shareholder value. At the end of the day, I would like all shareholders to really understand the Cygnus psychology as far as managing Cygnus credit investment, the business that you own and invest in. We take the duty of stewardship of your capital extremely important, and we also take the duty of generating value for you, and at the same time protect the business from downside risk. Those are fundamental principles that guide our strategy. So we are very long-term in our focus, and we are undeterred by short-term volatility as the performance of the business indicate. Before I get into the two themes I want to discuss with you this morning, I would also like to step back a little and reiterate some sentiments shared earlier by our Cygnus Credit Investment new chairman, Mr. Linval Freeman, about Wayne Iton, the former chairperson of Cygnus Credit Investment. And of course, needless to say, and Linval had expressed those sentiments already, Wayne did a tremendous job taking the business from a startup to hitting record profits at the end of the fiscal 2021, and in fact emerge as a leader in the Caribbean private credit space. So I just want to say on behalf of Cygnus, thank you, Wayne, and we as shareholders, investors, managers of Cygnus Credit Investment appreciate the tremendous contribution that you did make during your tenure. And of course, Linval, we look forward to working with you to accelerate the business. There are two things I want to talk to shareholders about today. Two things. And they are intertwined. The first one is reflection on the journey so far. And the second one is the next phase, accelerating shareholder value. The first point, reflecting on the journey so far. When we spoke to you in the raising of the capital for the IPO at the first AGM, we talk about a pioneering journey. We talk about transforming an industry and the landscape of the financial services sector across the region, building the private credit market, and you came on board on that journey. And over the last 4 years, we can describe that journey of Cygnus Credit Investment as one of growth. Year after year, we have delivered record profits. Is that true? Year after year, we have grown the balance sheet of Cygnus Credit Investment. We have pioneered an industry. Right now in Jamaica and the Caribbean, if you talk about private credit, especially in Jamaica, people understand what you're talking about. Flexible capital, customized solution to help businesses grow. We have done that. So the last 4 years of your business was all about growth, pioneering an industry, and leading the way in creating shareholder value through private credit. There are evidence to support this, and Jason spoke a lot about them. The balance sheet of the business is now approximately $90 million US, sorry. And we, last AGM, we indicated that in 3 years we would like that balance sheet to be 100 million. We are well on our way to achieving that. The equity of the business, Cygnus Credit Investment started with $16 million US in equity. Today, after 4 years, it is 66, almost 67 million US dollars. Most importantly though, at the end of last fiscal, the business made $5 million US in profit. So in less than 5 years, you invested in a business that made $5 million US starting from zero in a new industry that it had to pioneer. Those are tremendous feat. I don't want to stop there because I really want shareholders to understand the journey that you're on by reflecting on what happened over the last 4 years. Think about dividends. We grow the balance sheet for you. We grow the profit, but we also live up to our promise by delivering consistent high dividend payment and increasing those dividends every year, such that when you think about our average dividend yield over the last 3 years, Cygnus Credit Investment average dividend yield was 4.6% in USD and approximately 5.1% in JMD. If you compare those numbers to any company on the Jamaica Stock Exchange over a 3-year period, you will realize that your company is one of the highest paying dividend stock on the market. So what's the business that you currently own today is? One, you have invested and own a growth company. So you have to understand, when a company increased profit by 154% last year, Jason? By 154%, and the previous year, high double digits and so forth. That's a growth company. When your dividend yield is among the highest on the market, and I think in US dollar, the US dollar stock is the highest paying dividend on the market, you can confidently see that SCI is emerging as a dividend general as well as a growth company. So when you look at the statistics, because the statistics actually tells story, it basically encompasses the quality of the business, the fundamentals of the business, whether or not the business has a very compelling value proposition, whether or not it is having repeat businesses, having new clients, solving clients' need. That's what the profitability and growth in profit actually reflect. Whether are we managing risk appropriately? We have 0 net credit losses during the period. Realize, so, which means we have not lost any of your capital. So, doing all of this with 2 years and still going of that happening in the worst and most severe stress, real life stress environment, you can be confident that you invest in a solid business. What I am trying to get to is that as shareholders, when you look at the data, the statistics, the performance of the business, and realize that all of these accomplishments took place whilst experiencing a severe economic downturn due to the pandemic, then we should not be distracted by short-term volatility in stock market and stock prices. We should not be deterred and feel anxious about volatility which are due to systemic issues in the stock market versus when you own and are shareholder in a fundamentally solid business, which Cygnus Credit Investment is. So I want every shareholder to leave here today understanding that you own and have invested in not only a pioneering business, but a fundamentally solid business that has shown over the last 4 years, in the middle of a pandemic, the worst pandemic in the last 100 years, that is able to consistently grow profit, grow dividend yield, and grow its balance sheet. So if you understand that, short-term fluctuations in stock prices that affect the overall industry represent tremendous opportunities for you. And I will leave that point at that. Reflection, reflect on it. The second point I want to talk to shareholders about, and Jason and Greg touch on it a little bit, is now the foundation is behind us. It is well set, it's solid. Our job, and I said this a million times, our job is to figure out ways to accelerate shareholder value. How do we make the business grow and be better, be stronger than last year, the year before, and so forth and so on? And the first phase of that process is the acquisition that we have, that you are doing, Cygnus Credit Investment is doing in Puerto Rico. And as Jason said, that we are going through the regulatory process at the moment. We are working closely with the Puerto Rico, the Accrescent team, as well as the local regulators to get the transaction approved so that we can move to the business of integration and alignment and get into doing business as Cygnus Credit Investment Puerto Rico. What that opportunity offers Cygnus Credit Investment shareholders is a platform, a tremendous platform. And I don't need to reiterate the size of the Puerto Rico economy. Jason has spoken to that. But if you understand the business, we bought a company with a $64 million US dollar balance sheet, a business that survived 2 crises. One, it survived the 2008-2010 great financial crisis and actually emerged out of that crisis growing. And of course, it survived the pandemic, the COVID pandemic. So SCI is buying a solid business with a solid team of executives. So when you combine the deep knowledge of that business in terms of the Puerto Rican market with the Cygnus team and their team, that is how you accelerate shareholder value. You're buying a business that is already a leader in its local market. You're going into a bigger economy and you're combining teams with significant strength. So we are going to be unlocking a lot more opportunities in that market at an accelerated space. And that's why I talk about the next phase that we are embarking on with you is to help SCI to accelerate shareholders' value. Not only that, we are entering Puerto Rico. Puerto Rico is a U.S. territory. What it offers is diversification into new industries, biopharma, pharmaceutical, healthcare. Also diversification of the investor base, which basically means that we can talk to a larger pool of investors to come on board in SCI, and that will help you to scale SCI at an accelerated space. It also represents an entry point into new markets. Next door to Puerto Rico, 45 minutes away, is Dominican Republic. Much larger market than Jamaica and much larger market than most of the Caribbean islands that we are in. There's also, of course, North American investors. They are going to Puerto Rico in droves because of special tax considerations. That allow, again, access to greater pool of capital for SCI. So when you talk about driving or accelerating shareholder value, because of the depth of the market, the size of the economy, access to capital, which is the lifeblood of a private credit company, this opportunity that we are in, that SCI has invested in, offers all of that. I want to wrap up then my conversation by saying, at the end of the day, a private credit business like SCI, your business, is all about 2 fundamental things. One, growth in terms of asset, which is where we use the customized solutions to solve problems for medium-sized firms and generate great yield for you. 2, capital. Whether you are raising equity or using leverage, how do you use capital efficiently? Right? And Jason mentioned it. How do you use the right mix between equity and leverage? And do you have access to that capital pool? Because the more you have access to that, the more you can deploy different strategy to optimize the use of capital to drive shareholder value. But the third point, which is tied into the idea of capital, is that what you do with capital is important. Selection of credit, the type of credit you invest in, protection of that capital, protection of the profit, and that's why we always talk about downside risk. So it's really about two things that drive value. Asset side, capital side. And we are entering a market, Puerto Rico, that give us the platform, give SCI the platform to drive both the asset side and the capital side. So that's how we will deliver accelerated shareholder value for XCI over the near term. Thank you very much, ladies and gentlemen.
Thank you very much, Beres, for that well thought out presentation. And I'm sure you shareholders are very excited about the journey ahead. At this time, we'll take some questions.
Will the share buyback program be pulled forward and happen in 2022 instead of 2023?
Jason, you want to take that?
So, as I said before, we haven't discussed that with the board as yet. We have to discuss that with the board, and then we'll know what the timing of it is. So I can't answer whether it's 2022 or 2023 or it's next quarter, because we haven't deliberated on the matters yet. All I was saying is that it's coming at some point, but I can't tell you if it's later this year or it's next year as yet. I simply don't have the information.
While I do appreciate the high dividend gain, is this stable long term?
Excellent question. I was waiting for somebody to ask that question, because I don't want to say it and then people say I'm just talking hot air. The dividends, if you think about what SCI is, right? SCI takes shareholder capital and then put that capital into companies utilizing debt instruments. And then we turn around and pay out up to 85% of the profit made from that activity back to shareholders. Always, consistently, every time. So therefore, if SCI is now at a stage where the balance sheet is getting to 100 million and beyond, you have the PR transaction on the horizon, you're going to have other acquisitions that will come throughout time. So as SCI's business model scales, one of the reasons why I want to scale the business, make it bigger then, make the business much bigger, is so that the dividends or the business opportunities, as they grow, the dividends will absolutely grow with them. So if you see SCI reporting massive profits, you can expect massive dividends. That's how it works. That's the design of the business model. SCI was actually designed because we know that, for example, in Jamaica, a lot of investors, they love income, right? But the way that they get income is that they go and put the money on a repo, that is taxable, or they go and buy some bonds, that is taxable. And some of those bonds will default on you and so forth and so on. So SCI is designed to give you rising dividends over time as we scale and increase the business, but also give you the opportunity to get capital appreciation. So it basically have your cake and eat it. So the answer to the question is a resounding yes, it is sustainable, and that's the reason why we are very clued up about not having a lot of realized credit losses or managing that. It is very sustainable, and as we expand and grow the business across the region, the dividends will become bigger and bigger and bigger, because as we make more profit, we're going to pay that out to shareholders.
Thank you very much, Jason. We have a question on the floor. Neville from the Gleaner.
Jason, or probably Beres, you speak of driving shareholder value. with the acquisition.
Sorry, Neville, can you start the question?
Mike was picking me up. Dynamic enough. You speak of driving shareholder value with the accretion acquisition. How will you realize this shareholder value, increase in shareholder value in terms of operations of both entities? Will we see accretion still operating as a subsidiary of Cygnus, or will there possibly be a merger?
You're asking an interesting question, Neville. So effectively, in Accrescent at the moment, it's not structured like Cygnus Credit Investments, right? Because the management team actually reside inside Accrescent itself. So effectively, what will happen is, because SCI is going to become the majority shareholder, Accrescent will effectively have a mini SCI in Puerto Rico, with SCI as the substantial majority shareholder. So, and then the team that is there will actually be extracted from Accrescent and become, just like how Cygnus Capital is the manager for SCI, you will have a SCI PR manager for SCI. So that's the way how the transaction will work, and that's one of the reasons why I said that this transaction was, is a transaction that was built for SCI to actually expand, because SCI is one of the few companies that could actually do this acquisition, just because of the dynamics of how SCI operate versus the dynamics of how Accrescent operate. So just to answer your question directly, yes, SCI PR will effectively become a subsidiary of SCI, and it's just like SCI take its money and went and bought all the assets of Accrescent. That's effectively what's happening. So SCI effectively get all of the benefit from the income being generated from that operation once they extract the cost out of it in terms of the management firm.
Thank you very much, Jason. There's one more question online. Go ahead, Nicole.
Okay. What will you do to convince most shareholders to sell during your share buyback, as SCI is one of the top dividend paying companies and most persons might not want to part with their shares?
So that's a very interesting question again, because the way I think about this, if we are trying to buy back the shares and nobody wants to sell, then immediately shareholder value would have been enhanced, because the stock price is going to surge, right? If I want to buy the stock and nobody wants to sell me, the stock price must go up. So ultimately, the whole purpose of doing a share buyback, I'm buying back the shares if I think the shares are undervalued. So if my act of trying to buy back the shares, nobody wants to sell me, then I have actually taken an action that benefits shareholders. So any way you take it, it's a win-win situation.
I have another one. Is SCI looking to do more PPPs in the future within the Caribbean?
Another interesting question. The answer to that is, and Big Greg is on the mic there, is absolutely yes. So if you just step back a minute and think about, we only have 4.5 years in operation, right? many of the things that we're trying to do, we have, I don't want to say put them on, many of the things that we're trying to do, we only going to start attempting or start executing them once we have built a solid foundation. And as Barry said in his speech, over the past 4.5 years, what we have been busy doing is building the foundation. That's the reason why the balance sheet leverage is so low, etc. So the answer to the question, absolutely and resoundingly yes. Because once we become much bigger, we can actually execute at a greater scale P3 transactions that are normally large in terms of size. But when we only had 38 million in capital, we couldn't really execute a lot of those transactions because we just simply not big enough. Now that we are getting, 100, 200 million in balance sheet size, it means that P3 transactions, many acquisition financing, many syndication, etc., will be able to put $20 and $30 million ticket in those type of transactions, and increase the velocity at which SCI generate revenues and deploy capital.
Okay, perhaps I don't understand the structure of ownership, but after reviewing the shareholders' holdings, I realize that I have not seen any shareholdings for the President and Chief Executive Officer, Mr. Beresford Gray.
Very good question, right?
As well as the Executive VP and CIO, Mr. Jason Morris. Why is this so? Could you explain?
Good, excellent observation. So I love those type of questions because I want shareholders to understand how this operates. So Cygnus Credit Investments does not have any employees. So we are not employed by Cygnus Credit Investments. We are employed by Cygnus Capital Limited, which manages Cygnus Credit Investments. So we actually own shares. So we own shares through multiple channels. We own shares individually, and we own shares through the manager, through our group company, Cygnus Capital Group. So there are two channels through which we actually own shares. So the reason why you're not seeing on a standard report, you would see the CEO or manager or so forth as executives of the firm, but we are not executives of Cygnus Credit Investments. So that's the reason why it's not showing up on Cygnus Credit Investments report. But we do own shares individually and through our group company.
Okay.
And so Dr. Ike Johnson, who you see as a director of SCI, who is also part owner of Cygnus Capital Group, where you see Cygnus Capital Group shareholdings under his name, that is one of the representations of our shareholding. Yes, but I'm just talking about under management. Yeah.
Okay. I noticed that SRF benefited from a short-term loan by SCI. What's the policy on affiliated loans?
Well, these questions are coming excellent again so that people can understand. So, excellent question. So we actually have a policy where related party transactions should not exceed 5%. Unless there's a special situation where it goes to the committee and the committee, which is chaired by an independent chairman, actually look at the transaction and approve it. So that's how that is structured. And each of those loans well, I shouldn't say a loan. Each of those transactions are actually at arm's length transactions, meaning the rate that SCI actually charged SRF was complaining that they were taking to the cleaners. But at the end of the day, all that matters is that SCI shareholders benefit from any capital that is deployed to any related party company. So the cost of that transaction was actually quite high for SRF. SRF was complaining about it. Okay. And it goes both ways, because there are times when SRF has liquidity and it is better for SCI to simply say, give me a bridge for 30 days or what have you. And so it goes. But all of those transactions are actually at market. So there's no transaction where it's like interest-free or it's 1% or 2% or 3%. It is done as if it was a client it was being done for an unrelated party as a client.
Okay, thanks, Jason. I have another question here from David Rose. With Cygnus Capital Management Limited gone, will the future relationship be Cygnus Capital directly to SCI in that kind of management structure?
Correct. So Sygnus Capital was actually managing Cygnus Deneb Investment, which is the private equity firm, and Cygnus Real Estate Finance, which is the real estate finance firm. And so what we did was just to bring Cygnus Credit Investment under that management umbrella, where Cygnus Capital Limited is the investment manager, so that we have what you call an alternative investment platform under Cygnus Capital Limited, and make that seamless. So that's correct.
Okay. For the share buyback, how would the firm fund the buyback? Fund the acquisition and maintain the high dividend policy?
So that's an interesting question. As I said before, we have to discuss that at the board level. SCI's profitability is increasing. SCI could also use debt to fund it because the balance sheet is extremely lowly levered. So it depends on what channel we use. We'll see what's the best route to fund it. But whatever route we use, rest assured that it will be done in a manner such that it does not disadvantage shareholders, because ultimately the objective of the buyback is to enhance shareholder value.
Any more questions online?
I have another one here. A relative of mine got the SCI annual report from the JCSD in the mail, and we're both shareholders at the same address. However, I never got the annual report in the email or in the mail. I know Cygnus emails shareholders all the time, so what happened here?
Yes, you can take it, Serlin.
I can see from here. I think that's a very excellent question, and I'm happy that the shareholders are raising that question. Now, what I can say, and our registrar is here today, and we know we have a very closely monitored system. So what we do know is that we mailed out over 5,300 letters to our shareholders. That is something that we have confirmed. I think we probably won't have full control over the post office system, so there may be some delays there, right? And but we do know that they were all delivered. The issue we're having, though, and I really am imploring our shareholders, what we're seeing is that we have probably 70% of our shareholders who have provided email addresses. Secondly, we're having a high rate of return mail, and the JCSC can confirm this. So what we're having is a situation where, and I know it's not applicable to this direct question, but what we're having is a situation where shareholders have more than one addresses and more than one broker number. And with that situation, what you're having is that there are multiple addresses. So you may be getting from one brokerage house, but you're not getting from another. So what we're asking shareholders to do is to make contact with your broker and have your addresses updated. Also, the JCSD has an account mandate form. What we implore you to do is to have that mandate form completed and include all the account addresses, all the account numbers that you have, so that the registrar can update. Because it pains our heart to see our shareholders' mail coming back. Not only are the mails coming back, but your dividend checks are also coming back. So on that issue as well, I also want to implore shareholders to have electronic mandates set up. So on an average, every 6 months, SCI pay dividends. What we're having right at this point, I think we're having over 2,000 or 2,700 shareholders that we're mailing checks to. Now, shareholders, your money is important. We hate to know that those checks are coming back to our registrar and you're not benefiting from those dividend checks. So I'm actually using this opportunity to implore shareholders, update your mandates, have your electronic mandate set up, and ensure that we can communicate with you in a timely manner. Secondly, that your dividend checks are received. And thirdly, that whatever notices we have to send to you, we can send them and we're certain that you're receiving them. Read the issue that has been raised here. I would like to ask the shareholder to send a personal email to sci@cygnusgroup.com or to info@cygnusgroup.com. We will actually look into the matter to see exactly what transpired there. And what we'll personally do is ensure that a copy of the annual return report is mailed to you. We'll also want to ensure that the address that is on file for you is also correct. All right, so once again, please get your account mandates updated. Thank you.
Thanks, Serlin, for that update.
I have a few more questions. Can we?
Yeah, go ahead, Nicole.
Okay. With respect to Acrocent, will it be funded by a mix of debt and equity? Also, if debt, is that being raised now?
Good question again. So the Acrocent transaction, the structure of the transaction is that is a combination of debt and equity that is to be used to fund the acquisition. But as for the amount, as for what SCI is using to put the debt and equity in, we already have that capital required for the transaction. And we also have additional capital that we are looking at from our banking partners. So to answer the question, we already have the capital, but the transaction is to be financed by a combination of debt and equity.
Okay. Based on other examples in the market, would SCI look to do a fixed capital amount for a buyback or do it at, say, for example, 1.2 times book value?
Yeah, that's a question that I will not answer at this stage, right? But it's an interesting question that is being asked because the shares are trading, as I would have shown, in some instances below its book value. So if the shares are trading below the book value, then whatever is trading at, that's what I want, that's what I'm gonna buy it at. If the market moves the shares to 1.2 times, then I guess that is where the price of the stock would be for me to acquire it. I can't acquire the stock at 1.2 times if it is trading below book value. And anybody who looks at SCI JMD chart in particular will see that the stock is trading below book value, which is ridiculous, in my opinion. Because if you look at the US dollar share price and do a conversion to the Jamaican dollar share price, there's a huge arbitrage that's going on there. And the J dollar shareholders actually are getting US dollar dividends. So to me, there shouldn't be this massive 20-odd%, in some instances 30-odd% difference between what the US dollar stock is trading at and what the J dollar stock is trading at. So to answer the question directly, we can't buy the shares at 1.2 times book value if it's trading below book value in the market.
Thanks for that, Jason.
Yeah.
More questions?
Yes. With respect to the buyback, seeing the company is fairly young, why not utilize the funds to continue to grow the company rather than pursue a buyback?
Excellent, excellent, excellent observation. So, the reason why we're thinking about a buyback, right, is really one reason, The stock is substantially undervalued. And therefore, that's the first thing. The second thing is that the amount of capital that we are talking about to do the buyback, in the grand scheme of SCI's deployment of capital, is not really going to be that material. Remember that if SCI is deploying, SCI on a go-forward basis is going to be deploying 70, 80, 100, $150 million a year. So if I use a fraction of that to buy back the undervalued J dollar, US dollar shares, and that causes shareholder value to rise, and of course, it would also mean that earnings per share would also improve because you have reduced the number of outstanding shares. Then I think that's the amount of money is not material to SCI capital deployment. So we could have done that, yes, but it's not gonna be material in terms of the amount of money for the buyback will probably be one transaction that we'll fund in 1 month.
Okay.
Because we fund, $5, $10, $15 million in 1 month all the time. US.
Okay. How will the shareholders' value be affected by the Accrescent acquisition? Is there any risk of dilution?
It will increase. So the transaction is going to be accretive to shareholders. Otherwise, we wouldn't be doing it.
Okay. Since SCI has hit its 100 million targets in effect, what's your next big target figuratively and also for the company in terms of reach?
So excellent. Go ahead.
Let's say the next 5 years, responses from Ike, Jason, and Beresford would be appreciated since they're founders of the business.
So excellent observation, right? So remember on the slide I said we now need to reimagine SCI's growth opportunity. And we are in the process of actually doing that. But if you're talking about 5 years from now, even though we haven't set the targets for that, we're talking about multiples. So if we are at 100 million, call it, let's use round numbers, we're 100 million now. Then 5 years from now, SCI can't be a company that is less than $500 to $800 million in portfolio assets, right? Because that's what we mean by scale. And obviously, we will grow organically, which we have done over the last 4.5 years, and we will also grow by acquisition. So if I were to just hazard a guess, even though we haven't computed it as yet, the company, is gonna be certainly well north of 500 million in terms of its private credit operations and portfolio across the region. And that's the best guess, given that we haven't actually done any work on that as yet, because we are in the process of actually doing up the strategic plan for the next 5 years currently, after we complete the acquisition of Accrescent. Bryce, you want to say anything?
Yeah, so to comment on, it's on. Thank you, Jason. To comment on that question, and thank you for the question, we are in the process of mapping out the next 5 years for Cygnus, and of course, SCI is a key part of that. And I hinted at that in my presentation when I talk about accelerated growth in shareholder value. The last, if you've been following us keenly, the last 4 years, we would be talking a lot about velocity, growth in velocity. Now we are talking about accelerated growth, scale, and we are talking about inflection points that will allow for that scale. So looking out in the future for SCI, Jason already gives some broad numbers. I would say to you that if we are dealing with accelerated growth, then we are very confident that SCI will look very different than what it is today. Today, SCI is operating in terms of headquarters, in terms of key portfolio mix, substantially Jamaica in terms of bias, and I think it's 50% Jamaica and the rest in various, maybe 7 other islands. When you look at that composition in the future, 3-4 years from now, Jamaica will be substantially smaller. It's likely, I don't know, I would guess Jamaica might represent something like 15% of the portfolio. So you're going to end up with a business that is multiple times the 100 million and much more diversified in terms of the spread of investment portfolio companies across different markets. And those markets will include not only the English-speaking Caribbean and the Dutch Caribbean where we are now, but will include the Spanish-speaking Caribbean and possibly LATAM.
Thank you very much, Beres. Is there any more? Okay.
Let me ask one of these here in the meantime. Okay. What percentage of the financing will be equity for the acquisition versus debt?
We're not going to disclose that at this stage, to be honest, right? Remember that this is a transaction that is going to regulatory approval, and we don't want any, so we're going to keep that close to our chest. We will reveal it all when the transaction has been approved and the deal has closed, meaning money has changed hands. But rest assured that the composition that we are using, we use our expertise to determine what's the best, negotiate the best composition in terms of debt versus equity. Rest assured on that. You can rest assured on that part.
How does the rising interest rate affect Cygnus's ability to access cheap capital?
So, I mean, at the end of the day, rising interest rates means that the cost of capital is going to be higher. But remember that SCI's balance sheet has assets on it, where when rates go up, we also will make more money. So the key question to ask is, what's the spread that we make on our money? So our spread will actually rise as rates are going up. What our cost of capital is, we are gonna basically structure our transactions such that on the asset side, we make a higher spread than we were earning when interest rate was very low. That's the first thing. Second thing, the cost of capital is going to be dependent on your credit. Your credit rating will drive the cost of capital. So before we got rated in September, I mean, our cost of capital would have been, I think, 6.5% or 7%. So now that we're in a rising interest rate environment, and majority of our funding is actually in Jamaican dollars, and we have a credit rating, two things are happening. One, the actual cost of the capital is actually gone down because of our investment grade rating. And when we close PR, we expect that will also increase the credit rating as well, which will also bring down the cost of capital. So the spread that we make is likely to widen. So if interest rates that we can fund that is, let's say, 7% or what have you, then what we are going to earn on our assets is going to maintain or increase the spread that we are making. So that's how you need to look at the business when you talk about the cost of capital, because we are pure financing company. All we do, take capital, deploy it into that instrument. So if rates are going up, we are going to make more money on that wider spread.
Okay. Is there any interest in investing in Africa?
At this time, no. We don't know. We don't know a thing about Africa, except that I went there one time.
All right. I have one last one here. Could future quarterly reports include a timeline of the lending products? Also, why did the last report not include the type of products such as preference shares, bonds, and so on?
Okay, so we do include the timeline of the length of product, which is it's in there. It's in every single report since inception. We give you the weighted average tenor of investments, which is currently 2.0 years, up from 1.8 years as of the September 2021. Last public available information is 2 years average, and it was 1.8 years average the time before that. The second question about why we don't include the structure of the products, very simple answer. We were doing it in the first year of operation. And then put it this way, we don't want anyone to copy our structures. So that's the reason why we don't put it in there. Because, as I said before, the ability to structure these unique debt instruments to create value for the portfolio company who need the capital, but to also protect the investment of SCI's capital in those portfolio companies. It is a skill set that is not readily abundant in the Caribbean. And therefore, when we start put out in the market space to say we use this structure and that structure, everybody going to copy our business model. So, or copy what we are doing. So we keep that close to our chest and we won't release that information.
Thank you very much, Jason.
That's it.
Okay.
Questions here.
Okay, and thanks for all the questions, investors, for those very good questions. At this time, I'll ask Mr. David Cummings to come and do the vote of thanks, after which our chairman, Linval Freeman, will move for the meeting to be adjourned. David?
Good afternoon, everyone. Good afternoon, everyone. Chairman, shareholders, members of the board, ladies and gentlemen, good morning, good afternoon. I think we can all agree that we have just participated in this morning, the conclusion of yet another successful year at Cygnus Credit Investments. I have the distinct honor to move the vote of thanks this morning on behalf of the Cygnus Group. We recognize the importance of your time, and so firstly, say thank you to everyone who took the time to be with us this morning, whether in person or virtually. Most importantly, we would like to thank you, our shareholders, both here and online, for having the continued faith in Cygnus Credit Investments to deliver these results, preserving and increasing your shareholder value, and for passing the 5 resolutions here this morning. This is your company, as Beres emphasizes. It is your company. And the Cygnus Group assures you of our relentless efforts to continue these robust performances. And of course, we look forward to seeing you all at our subsequent annual general meetings. Successful events of this nature take a collaborative effort. And so we now would like to recognize those directly and indirectly involved in ensuring this reality. Thank you, first of all, to the chairman and the board of directors at Cygnus Credit Investments for their robust leadership in guiding SCI to achieve these results. We must also express our gratitude to the extremely hard-working investment banking and investment management teams led by Greg Samuels and, of course, Jason Morris, who have guided this performance. A word on Jason. I think we'll all agree that if you don't find Jason's presentations impressive, I don't know what you will. We also extend our thanks to our General Counsel and Head of Compliance, Serlin Hudson, and our team. I see Andrew Foreman here, who we know put in many hours in planning and organizing this AGM. In looking at the annual report and around this venue, it's also clear that our marketing and PR teams invested a lot of thoughtfulness and energy into this. Let me single out the magnificent team at L Creative, led by Lisha and Elena, and of course, their complement of innovative thinkers and implementers. The report was produced by Sarah, and all credit goes to her Simply Jim Dandy team for such a great product. I think we can all agree that once again, as it always is, the report is intuitive and easily digestible. Of course, we must mention and say thanks to the media for the positive coverage this has received, and of course, the many questions we got from Neville, from the Gleaner. Is Neville still here? And of course, David Rose online. So we all heard an inspirational speech from our President and Chief Executive Officer, Beresford. Every time I hear him speak, I say to myself, yep, that's a company I would love to work for. Record profits, accelerating shareholder value, high dividend yield, record dividends, no loss of capital, continued growth, fundamentally sound company. Those were the takeaways from the inspirational words Barry shared with us this morning. And I would ask the shareholders and all present here and online for us to give a round of applause for the inspirational speech of Barry. Of course, Beres is backed by the entire management and staff of the Cygnus Group, who we all know work tirelessly behind the scenes to deliver these results and put things in place for this event. We know many of them went above and beyond, as all Cygnus do. And of course, I acknowledge Elizabeth, Mona, Nicole, Donna, and many others. I see Anna Dean is here with us. All the other team members who are not here. It's really been a fantastic effort. Thank you. We would also like to express our appreciation to the management and staff of the Terranova Hotel for their flawless support, and to the combined team of Phase 3 Productions, Blueprint, Agile Business Solutions, and of course, I see the Naomi Garrick-led Garrick Communications. Thank you. The combined technical prowess allowed us to have the smooth online attendance and participation that we had here this morning. There are also, I'm sure, many other unsung heroes behind the scenes, and we acknowledge and thank them all. Finally, thank you all for attending this annual general meeting of the Cygnus Credit Investments. We look forward to seeing you all next year at the AGM, and may God continue to bless you all, and please continue to stay safe.
Ladies and gentlemen, it's just left for me now as a chairman to bring these proceedings to an end. But before I say that, I'd just like to declare as well that as a chairman, I'm also a very happy shareholder. All right? So I make sure I declare that. And so with all the business that we have had for today, I now declare the meeting closed. In keeping with the disaster risk management protocols, there should be no gathering of members after the meeting in observance of those protocols. Thank you all, those who are in attendance face-to-face and those who are online, and we look forward to your continued support in the coming year. We take the opportunity to wish all our members good health as we look forward to having a brighter future and a good year for 2022 to top 2021, and to have you back again at our annual general meeting next year. Thank you very much.